Hello, everyone. Welcome to my channel. Today, I'll discuss mutual funds and what are mutual funds. Mutual funds, this is a kind of investment vehicle whereby money is pulled together from different type of investors to invest in various securities. So when I talk about investors, these are can be a person like you and me. It can be an organization which wants to invest his monies for his employees or maybe the profits they have earned. And when these monies are pulled together, they can be invested in stocks, bonds, or any other assets which is in the stock exchange. And when I talk about the stock exchange now, I'm referring to the Nairobi Stock Exchange. So when the mutual funds are collected by the fund manager, they can be able to buy these types of shares or securities, and they are able to invest on them. And once they earn or they go up, they are able to that's how they earn their how the mutual funds grow, or they how they earn those funds. So mutual funds, it's good to know that the mutual funds are regulated, and the organization which is regulating the is called the Capital Markets Authority, or the CMA. So for investors, for an investor, he should have the opportunity to diversify their portfolios and potentially earn higher returns. Here are some of the key things you need to know when you're investing your mutual funds in Kenya. So, what types of mutual funds are found in Kenya? There are several types, and just to be specific, I'll talk about four types of mutual funds. And here they are. One is the equity funds, the balanced funds, the fixed income funds, and the money market funds. So you need to know each and every type of mutual funds and what are its characteristics. What does it entail? What charges does it have? What fees does it have? And probably when you're investing in these types of funds, you are able to understand very well what you need to know before you put your money to those kind of funds. So each type of fund has a different investment objective and strategies. So it is very important to choose the best that suits your investment goals or objectives. So it's very important to know that. So before you invest on this type of mutual funds, you need to know what are the risks involved and what kind of returns they do have. So it's very important to know that mutual funds, they do have some risks, and they also they do have returns, because of course wherever you invest you'll always get some losses and some income. So mutual funds in Kenya, like any other kind of investment, will come with its own risks and will also come with its own returns. So it's important to know that when you're investing, it's likelihood you are supposed to lose, or you might earn or lose. So it's very key to know that. So returns are not guaranteed, and investors may lose money. That is tough. Yeah. And it's very important to understand that the investment strategy of the fund and its past performance before investing. So what does it mean? It means that for an investor to invest on a particular fund, you need to understand how did it perform for the last 10 or 20 years before. How was the market performing with this share or this type of fund? Did it gain? When did it dip? How did it boom? Why did it boom? and why did the investors lose at that particular moment? There are several factors which might come with it, maybe political, a regulator, and other forms of things which might affect the fund when you are investing on it. So it's very key to know that bit. So mutual funds also come with fees and some charges, and it's very important for you to an investor to know what type of fees or what type of charges do they incur. So here is a point. You need to know that mutual funds in Kenya do attract some charge. And this type of charge is called the management fee. And this fee is deducted when the investor is getting its return back. So when you are investing sorry, not your share, when you're investing your mutual fund, at the time of the harvest, that is the time they deduct the charges. So it's very important to know that when you're investing your money, if it's your 100,000, 1 million, 10 million, 20 million, they don't ask for the charge at that point. But when the return is being paid, that's the time they do charge the fees. So the fees again vary from one fund to another, and it's very important when you are doing this kind of investment to compare. Does a fund, like for example the equity fund or the fixed income fund, does it attract more charge than the other? Which one has lesser charges? And by doing that, you are able to know what kind of type of mutual fund you can invest in, and you are able to gain your return in future. So they do have the charges, and it's very important to know that. And you are can able to ask the tariff chart and see what kind of charges do they have, and you can be able to compare with them before you put your money in that kind of investment. So again, it's good to know that when you're investing your shares with these fund managers, they do what they call they are regulated, or there is a body called the CMA which regulates them. So when you're investing your shares, the government has at its hand, and there is an act which protects those kind of money. So you don't just go to just any person to see to try to get a person who is not regulated, or somebody. People lose them. People have lost money. People have really suffered a lot, and they have earned their money. So the government has its hand when it comes to this kind of investment. So the CMA is the one which has the authority to make sure that the fund is well managed and the investors are also protected. So when we invest, me and you, we are protected by the law, by this body called CMA, and they are the ones who make sure that the fund managers do invest their monies properly in good pockets or good kind of investment. And we, by doing that, the economy will flourish, and we are sure that when our money is being invested, when we have put our monies, all we have earned, it can be pension, it can be money you gotten from your business, you're able to get your return and you not lose your money. So it's very key to know that. So what do you need to know when you need to invest? Yes, there's a process which you're supposed to undergo for you to invest. And this process is you need to know that in Kenya, you need to open an account. This account is called the investment account, which should be or must be opened by a licensed fund manager. So, where do you get this fund manager? I know that is a question probably one is asking. That's something we can also discuss in future and know, but this is something which is in the public domain. You can be able to know what type of or who are these fund managers when you want to invest. So you are able to get them without any challenge. So that is very key when you want to invest. Make sure that you have an investment account and you are able to know these fund managers who are licensed, and they can get you through when you have some money you want to invest. So you can then choose the mutual fund that meets your investment goals and objectives, and they always have a minimum investment. So what is minimum investment? This is the minimum amount of money which you need to invest, and this depends with uh, 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 a fund to other. So it's not generally something which you can say that your funds are probably for you to invest in the mutual fund. You need to have a particular amount of money minimum. So it depends. So you find that equity funds, they have their minimum. You find that the money markets, they have their minimum, and the balance funds, they have their minimum. Or you might find balanced funds and money market funds, they have the same type of a minimum amount. So minimum amount is that amount which you need to have to invest with them. So each type of fund has a different investment objectives and strategies. So it is very important to choose the one suits your investment goals. So it's good to know that, and by doing that, you're able to learn and gain the best in return in future. So when you look at this person, or look at this picture, this is somebody who is investing in his small garden, and you can see he's following up on what is happening. He is able to put some water on his garden and his plants, and you can see they are flourishing. They are super green. They are doing well. So the same thing when you are investing with your fund manager, you need to make sure that you monitor your investment. And how do you do this? So you're supposed to check on the reports which they publish regularly. So mutual funds in Kenya are regulated and published regularly, and daily newspapers and their websites. So you can be able to view the charges, the fees, and how much and how and what is happening with the investment and your money. So you're able to view what is happening. You can compare different years, different months, different types of securities, and how they have been performing, and what type of fees they track. So they are tracked. So you are able to track all that and be able to make the right decision when you're putting across your money. So, in a nutshell, it's very important to know that mutual funds offer a very excellent opportunity for you as an investor to put your money and diversify your money for the future, and make sure that you earn the right income or return as you grow. So investors can diversify the portfolios and potentially earn higher returns. However, it is crucial to understand the risks, fees, and also the regulatory framework. This is another thing which you need also to understand. Depending on the regulator, different regulations also affect our investment. So if regulator is quite tough by giving us punitive charges, definitely it will be very hard to invest in those type of investment. So it's very important to know that an investor, or as an investor, you need to check the regulator and see what type of charges do they have for you to invest. So, for example, you might compare country to country. You might find some countries are favorable, but I believe that because we are discussing about Kenya mutual funds, definitely there's good regulator who is able to make sure that our funds are well protected and they don't overcharge us for their earned income, which we have done for a very long time. For example, if it is your investment, pension investment, you have tried to save for so many years, and at long last, you find there's nothing. So regulators are very key when it comes to this kind of investments, and that is very key for you to always remember. So thank you very much for listening to me. I invite you to follow my channel, like my channel kindly, and also you can share the link to a friend that be able to understand and learn together the different types of investment for the future. Thank you very much.